All right, investors, buckle up. FedEx, that massive shipping powerhouse, has been on a roller coaster, and many of you are asking, is the bottom in for FDX? Today, we're cutting through the noise with a deep, multi-step analysis to give you the clearest picture possible. So, what's the buzz around FedEx right now? The market narrative is heavily influenced by a few key things. We're seeing a focus on global macroeconomic conditions, especially with those e-commerce trends still unfolding. There's also been a significant leadership transition recently, with management keen to emphasize continuity and their strategic path forward. Interestingly, despite all this, the latest earnings call didn't provide specific forward financial guidance, leaving a bit of a vacuum that the market is filling with broader macro concerns. For those new to the show, let's quickly recap what FedEx Corporation is all about. This isn't just a delivery company. They're a global giant providing transportation, e-commerce, and a whole suite of business services across the US and internationally. Think FedEx Express for your urgent packages, FedEx Ground for your everyday deliveries, and FedEx Freight for those big shipments. They even handle integrated supply chain management. Founded in 1971 and based in Memphis, Tennessee, they're a foundational piece of global logistics. As I mentioned, the company hasn't given us specific forward financial guidance, so we're relying on our models and market indicators to project future performance. Now, let's dive into the core of our analysis, the scenarios. Given the lack of specific forward guidance from FedEx itself, we've had to reconcile the broader market narrative focusing on macroeconomics and company initiatives with our own projections. This approach allows us to build a robust model even when management is playing their cards close to their chest. Let's break down the possibilities. First up, our base case, which we're giving a 45% probability. This scenario assumes a stable global economy with moderate e-commerce growth. We envision FedEx continuing to execute its drive initiatives, which should lead to gradual margin improvement and cost efficiencies. We're also banking on a smooth leadership transition post-Fred Smith, maintaining operational focus. The technical consolidation we've seen in a bear flag pattern does introduce an element of caution, but the base case remains plausible given the company's historical performance and ongoing strategic efforts. The technicals slightly temper the probability here, but don't negate the fundamental outlook. For the numbers, we started with a current diluted EPS (LTM) of $16.86, projected a one-year EPS growth of 9.11% from its EPS growth next 5Y metric, giving us an estimated one-year forward EPS of $18.40. We then applied an assumed PE multiple of 13.17x based on its current PE, which brings our base case fair value per share to $242.30. Next, let's look at the bull case, which we're assigning a 20% probability. This is our optimistic scenario, where we foresee a stronger than expected global economic recovery and accelerated e-commerce growth. In this world, FedEx's Drive program yields superior cost savings and margin expansion, and the leadership transition isn't just seamless but actually invigorates operational excellence. While the technical bear flag pattern makes an immediate strong upward move less probable, a significant positive catalyst could still trigger a breakout against this pattern, leading to increased investor confidence and a higher valuation multiple. However, the current technical setup assigns a lower probability to this outcome in the near term. For the valuation, starting with that $16.86 current EPS, we projected a more aggressive one-year EPS growth of 15% due to that strong economic recovery and operational efficiency, landing us at an estimated one-year forward EPS of $19.39. Applying a higher PE multiple of 15.0x, reflecting accelerated growth and positive sentiment, gives us a bull case fair value per share of $290.85. And finally, we have our bear case, which we're giving a 35% probability. In this pessimistic scenario, a global economic slowdown or recession significantly dampens shipping volumes across all FedEx segments. Elevated competition and persistent labor costs erode margins faster than efficiency initiatives can counteract. Plus, potential operational hiccups or increased market uncertainty following the leadership change could really weigh on performance. The technical analysis, folks, strongly supports this scenario. That bear flag pattern consolidation between 240 and 215 suggests a higher probability of a breakdown. The current price of $226.05 is right within this pattern, with support levels at 220 and 200, aligning perfectly with a potential downside move and a lower valuation multiple. For the numbers, starting again with $16.86 current EPS, we projected a one-year EPS decline of -5% due to that economic slowdown, resulting in an estimated one-year forward EPS of $16.02. With a PE multiple of 10.0x, reflecting lower growth and higher risk, our bear case fair value per share comes in at $160.20. All right, let's pull up the chart and see what the technicals are telling us. As we've been watching, the FDX chart has been consolidating in what looks like a classic bear flag pattern. This pattern has been playing out between the $240 and $215 levels. If we see a breakdown from this pattern, our immediate support levels are at 220 and then a stronger one at 200. On the flip side, if we manage to break out of this consolidation to the upside, we're looking at resistance around the 265 mark. This technical picture definitely influenced our scenario probabilities, especially favoring the downside potential in the short term. So, is the bottom in for FDX? After weighting our scenarios, with the base case at $242.30, 45%, the bull case at $290.85, 20%, and the bear case at $160.20, 35%, our blended fair value comes out to approximately $223.28. Given the current price of around $226.50 and the clear technical signal of a bear flag pattern, my verdict is that the bottom is likely not in yet for FedEx. The technicals heavily suggest further downside is probable before we find solid footing. This stock appears to be trading slightly above its weighted average fair value, and the technical setup warns of potential drops. Considering our analysis, if you're looking to enter or add to your position in FedEx, I'd be looking for lower prices. The $220 level is an immediate support, but the stronger technical support at $200 looks more compelling. If the bear case plays out, our fair value estimate of $160.20 would be a very attractive entry point. So keep your eyes on the 220, 200, and potentially even 160 areas as ideal buy levels. If you found this deep dive into FedEx insightful, go ahead and smash that like button. Don't forget to subscribe to the channel if you haven't already, and hit that notification bell so you're always updated when we drop our next Is the Bottom In episode. And as always, let me know your thoughts on FDX in the comments below. Hey, just a quick reminder, folks, I'm not a financial advisor. This is for entertainment and educational purposes only. Always do your own due diligence and consult with a professional before making any investment decisions. Investing involves risk, and you could lose money.